Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 5th of October. All right, nice little slap in the belly or kick in the belly for the US equities to kick the week off. And that I think the market's getting very nervous. Obviously, non-farm payrolls on Friday, but that sort of big downward spike there on the equity markets is something to worry about. And we are starting to see the dollar, right, just poke its head back up after a bit of a fall yesterday. And if I just give you a look at the charts, right, the major currencies, the dollar is just coming back a little bit. Okay, we are sort of in the middle of the Asian session, but and the dollar block are all sort of going down, as you can see. Now, I'm looking at that. I'm trying to work out across the board, why is the dollar rallying here? And it's, you know what, I'm starting to think it could start to be coming into a bit of a play about this dollar safe haven situation. You can see the dollar pairs all rallying and the dollar block falling at this point. The tricky part is, if you look at the, for answers out of the bonds, well, the long dated bonds, 10-year, 20-year, 30-year, price is a bit high, yields are a bit lower, but the short dated stuff, hardly any movement there, right? So it's like, well, okay, if the yield is falling on the long dated stuff, maybe that's dollar weakness, but we're not seeing that. So you got to try and piece together what's going on. That's where I'm sort of looking at the equity markets. Okay, big hit the downside. Equities come off its nervous stations, right? We come back to have a look at where the week is structured, right? You got obviously the major focus there on payrolls. You'll start to see this all week, right? The other one is the situation with the US debt ceiling, right? Debt default possibility, that's in 2 weeks, right? We've got 2 weeks for this thing. So that isn't really going to come into play yet. That'll become a focus after the non-farm payrolls on Friday, right? So a lot of these articles, they will start referring to, you know, what's happening on the dollar, but with reference to Friday's non-farm payrolls, because that's the main event for this week. Now, if we've got a bit of a question mark over the payrolls, we've got a major question mark over what happens if the US default on their debt, right? What happens there to the dollar? What happens to bond prices? What happens to all these sorts of things? Well, that's where the situation can come back, and the US dollar can end up being the safe haven after all. I mean, equity's getting hammered, question mark over the bonds, but as I said, that's 2 weeks away. We are seeing the dollar rally here, and I'm just trying to make odds and ends of why it's rallying in the Asian session. I haven't seen any other news to tell me otherwise, right? So when you come back and have a look at the major instruments, what have we got to look at today? Well, start the week, you're looking to make some cash. Now, we've seen a great retracement here from the lows just above 134 in sterling. That's doing a bit of work there. Euro, well, sort of just drifting here around 116.03. I mean, it topped out at 116.40, right? But there's nothing to say it doesn't go back up or go back down at this point. And the Aussie, well, it's drifting back down towards support here, but you know what, that level's probably all over the place. It's been up and down through that. We've got the RBA cash rate decision in about 2 hours, I think it is. I can just move my thing, about an hour and a half. And the Kiwi, bit of a squeeze topside, just drifting down. If anything, you've got dollar CAD that broke down. It's come back and retested this trend line here almost perfectly. Looks a bit overbought there as well. So you think that'd drift lower. And that's where we are. It's sort of like, I just can't put my finger on it at the moment. Obviously, the focus is looking deeper into the week, non-farm payrolls. The dollar's doing some weird things with various things going on. If anything, just as I am giving this insight, the yields are falling back down. Prices are falling again. That was up about 0.25 for the 30-year. So those yields are coming back, which should give the dollar some sort of strength. That makes a bit of sense with the US equities futures. They should be a little bit lower. And that sort of seems to be the wave at this stage. Right, it doesn't really sort of play out. Looking at bond prices and equity markets, right, for direction for the currencies, yeah, you can get that, but it's not an exact pip for pip situation, right? It may take an hour or two for the situation to evolve and to become clearer, right? By then, things have already moved, and that's the catch, right? That's the catch 22. Do you get in now or do you get in later? Do you manage things? If anything, today I'm looking at this. there's clearly a lot of excitement in the market around Friday's non-farm payrolls. We've seen some good retracements of the dollar move over the past week, done in the last 2 days, couple of days. Now, does the dollar start to charge again? Well, I think it does come down to the bond markets, but that price action will be clearer during the North American session than the Asian session. I can tell you that, right? So you probably need to wait for that to sort of work out where we go from here. Now, as far as keep an eye on what's coming out, like Euro, we do have some European PMI numbers. Some of these are final numbers. Usually there's less variance in the final number. You got some services PMI, once again, the final number in the UK, but don't take your eye off the screens with regards to the data, because this is where the various things come into play. To me, the ISM non-manufacturing PMI numbers, probably a key one to look at. As I said, we've got the RBA cash rate today. Sorry, that's the Kiwi one. That's the next day. The RBA is later. If I just scroll back up, there it is. Oh, where'd you go? Here we go. Right, cash rate. Now, this trade balance is inconsequential, so don't get caught up in buying Aussie dollars off that. The RBA cash rate is one of the key things. We've got a few variables out of the European session, but I think it's going to come out of the other instruments, the bonds, equity markets for direction this week. We've seen it last week. And if I just show you the charts again, I've overlaid those US 10 years on the charts. You can see where they are correlating, where they aren't. The massive discombobulation here with that move in dollar Swiss, but dollar yen seems to be loving the 10-year price action, as do some of these dollar block pairs, right? But just to finish on that, with those correlations, right, you don't want to become a correlation nut and just be trading pairs off specific correlations. Those correlations are in play for a short period of time and then they break down. So don't sort of put all your hopes on the correlations. They work, as I said, for specific reasons, but when they break down, you got to be careful. You're not sort of throwing good cash after bad. All right, guys, well, plenty going on. Hard to really pinpoint exactly what's going on, but this is going to become clearer as the days we go through the week. Non-farm payroll's the key. Keep an eye on the RBA cash rate. No change in rates. Could be a convoluted event. Maybe some activity in euro and sterling. Outside of that, we're still going to wait for the major numbers later in the week. All right, guys, have a good one. Cheerio.